Hello and welcome. In this session, we are going to look at the utility of equity research. So let us look at the roles of equity research that will explain to us what is the utility of equity research. Research gets consumed in industries like stockbroking companies, investment banking, venture capital or private equity companies, mutual fund, PMS, which stands for portfolio management services, and insurance firms. And also, not exactly equity research, but a sort of financial research also gets consumed in banking industry. Stockbroking companies. So let us first of all look at the role of research in stockbroking companies. Stockbroking firms' business is to get commissions on the deals they execute. Their clients are various domestic mutual funds and insurance houses, foreign institutional investors, high net worth individuals, and retail investors. The research is a tool that brokerages use to recommend to their clients the stocks so that the clients give them preference when they place the orders. Essentially, research is used as a differentiator tool rather than as a product to be sold. There is many a times misconception that the research that brokerage houses generate gets sold and generates revenue for the companies. Research is typically a cost center. The better the research, implying better the track record of recommendations, the better are the chances the brokerage houses generates higher commissions from the clients. Typically, in brokerage houses, there are various types of research reports. It includes initiating coverages, quarterly updates, event specific updates, etc. The research reports from brokerage houses are considered biased because of the vested interest of generating business involved in the entire process. The role of equity research in brokerage houses is to study the listed companies, valuing the companies, giving recommendations like buy, sell, and hold. That is the broader role of equity research in stockbroking companies. Now let us look at the role of research in investment banks. Investment banks, like others, are also brokerage business. The difference is that investment bankers are not involved with the actual transaction of equities. They are involved more in cracking the deals that include buying or selling a portion of or interest stake of the company. Typically, there is one investment banker appointed from each side of buyer and seller. While the buyer would want the deal at least of the valuations, the seller would want it at the maximum valuations. Investment bankers are basically the matchmakers. The role of research in investment bank includes evaluating the business plan proposed, feasibility study of the business, estimating growth, valuing companies, using the research done for the final negotiations, and presenting the research to relevant parties, which includes typically the clients or investors. So that is broadly the role of research into investment banking. Now let us look at the role of research into private equity and venture capitalist firms. Private equity and venture capitalist firms are companies that invest into other companies. Although they invest at different maturity stages of the company, private equity and VCs are actual risk takers. So they are more cautious than the advisors or brokers. They clearly look for companies that will generate sufficient returns. They perform internal research to validate the proposition. The research plays a critical role before PEs and VCs arrive at the conclusion of invest or not to invest. The role of research at the very broader and basic level includes feasibility of business plan and proposed scalability, feasibility of returns claimed, valuations, and negotiations. So let us look at the role of research in mutual funds, portfolio management companies, and insurance companies. Like PE and VC firms, mutual funds and portfolio management companies and insurance companies are also risk takers. These consume the research done by the brokerage firms as primary research. Later, they internally do the research to validate the probability of a series of events expected to choose a few best companies from the pack recommended. Next is role of research in banks. Banks do not require equity analysis because predominantly they are into disbursement of debt, but it requires broader business and cash flow analysis. It requires the market surveys to validate the business ideas. Banks require risk, specifically the default risk analysis. Bank requires research in following areas, predominantly project appraisal and financing, term loan sanctioning, secured and unsecured loan sanctioning, etc. The banks prepare a project report and CMA report that contains all information on the project feasibility. That is broadly the role of research into various industries. There is one more industry where research gets consumed, which is credit analysis industry, which we will see separately. Thank you very much.